What's good, YouTube? Welcome back to my video. So today I want to talk to you guys about Fubo TV. I wanted to basically summarize the Q2 earnings call of 2021. These guys have absolutely crushed their numbers, and as you could tell, the after hours has gone up to about $32 per share. They absolutely crushed the numbers. They raised their guidance. Everything about that call was all positive. I didn't hear a single negative thing in that call, and they have absolutely crushed it. So basically what I want to go ahead and do is just go over everything with you and just summarize the 1 hour call into about like 7 to 10 minutes. Or essentially right here is their earnings report. I have verified these numbers are correct. Their estimated was supposed to lose 49 cents a share, and they're actually only losing 38 cents a share, which is a 21% upside. And this is for the earnings. So before I get into details, for those of you that don't know Fubo TV, they're basically a streaming platform where you could go ahead and watch multiple different sports, multiple different channels all in one bundle, and you pay a monthly subscription just like you would pay for Netflix or DAZN, etc. So they are going to be doing sports betting, and they're going to be integrating sports betting app with their Fubo TV platform. So essentially, and I'm going to show you guys a video just now on what they released in the earnings report. You're going to be able to flip through the channels, and the app will switch to the betting screen of what you're watching on TV. So if you're watching baseball and then you scroll to like basketball on the app, it'll switch from the betting of baseball over to basketball directly and seamlessly. So if you want to go ahead and watch, this is the video. So as you guys can see, that's pretty much what it's going to be looking like. It's pretty good. In terms of what I wanted to bring up in the call, some of these notes. Right now, Fubo TV delivered a record of $130.9 million in revenue. They gotten 681,721 total subscribers in Q2. They raised their guidance for 2021. So what's very interesting is the numbers that they wanted to achieve in 2022, they're going to be achieving that in 2021. They're a whole year ahead in terms of their numbers. Now, their live TV streaming platform, they increased their ad revenue by 281% year over year to 16.5 million. They grew their engagement by 148% to 245 million hours of watch time during Q2 in 2021. And what's actually very interesting is in that call, they brought up that they have more ad revenue than Roku has, and they even have better margin rates than DraftKings. And they said that this will be achievable, and this will be achievable to actually maintain it, and it's not just a one-off thing. And that's why they had went ahead and raised their guidance. So they've mentioned that in the last 10 quarters in a row, they have been improving year over year from quarter to quarter. And this just shows that this is a growth company. And they're saying a reason why they really crushed their numbers is because there was the Euro Cup. They were showing in games for US and Mexican national games. They were getting a lot of subscribers from that. And they said that for Q3, the number one thing that they get in terms of subscribers is due to the NFL season. And as you guys know, NFL season is coming back, I believe, literally next week or in a few days, actually. And what's actually insane is in 2020, if you guys know, obviously you guys know the lockdowns happened and people were watching whatever sports that was available. And everyone was watching a lot of sports. And basically what happened is they're saying that the numbers that they have been getting in 2020 during the lockdown when all the sports hype was there, they're getting just as good numbers in 2021. So if you took their prime time of watching sports, I believe it was like June, July, they were saying that they were averaging about 7.5 hours per customer. As of right now in 2021, they're averaging 7.0 hours per customer in terms of watch time. So as you can tell, the numbers are insane. They also talked about upselling. So they have upselling and they have advertisements that they do sell. they do upsell certain services and certain content. So they've sold 1.5 million in attachments, and compared to last year, it was only 388,000. So they're saying that the upselling is about 95% margin for them for the services, and 20 to 30% for the content based on obviously the content that they're going to be attaching. It can vary between that bracket. So one thing I wanted to mention as well is they were expecting 915 subscribers in terms of 2022, and they have pushed that off to 2021. So that's the numbers that they're looking to target. And they said that in terms of their actual profit margin, they're looking to aim for about 50% in terms of profit margin overall, but that would be a little bit more long term. So let me go over some of the numbers that they have dropped as well. So their contribution margin, essentially the average revenue per user has grown over time. So in 2009 in Q2, these are all Q2 numbers, $50 to $54, now $71.43. And as you could tell, the in a percentage wise, in terms of the adjusted contribution margin, it's gone up from 5.1% to 8.3%. So they are making more and more money from each customer that they do have, and this is based off of app billing in terms of the monthly paid subscriptions and other sources of revenue that they do earn from the clients. So I want to talk about net losses. So as you guys can see, their net losses has gone up year over year in each Q2 quarter. However, if you look at it in terms of revenue, from Q2 2019 to 2020, it went from negative 149 to negative 167, and now it's gone all the way down to negative 73%. So there is a huge improvement. They are making a lot more money, and this is very normal for growth companies to not be making money. As long as you see that they're improving and their revenue numbers are crushing it, then there's no need to worry. They do still have some time to go ahead and break even and start making money. So adjusted EBITDA, the numbers went from 41.9 million to 47.4 million in terms of loss, but in terms of the percentage, it went from negative 95% for revenue to negative 36%. Now, here is the interesting part. Advertising growth is insane. Look at these numbers. So in Q2 2020, they were at 4.3 million, and they crushed it and got 16.5 million dollars in terms of advertisement revenue, a 281% upside. Now, in terms of advertising for average revenue per user, it's gone from $5.37 to $8.70, which is a 62% upside. So as you guys can see, they have grown a lot in terms of subscribers, and the revenue has advertisement revenue has insanely grown. So expenses. I'm not going to go over these numbers with you guys. If you guys want, you could pause and read the chart. It's pretty self-explanatory. Subscribers, broadcasting, sales, marketing, etc. And as you guys can see, the percentages on each category has gone down, and the expenses went from 252% for the total revenue in percentage to 155%. So it's slowly getting there. We haven't broken even yet, but it's getting there. So in terms of guidance, Fubo TV sees that in Q3 2021, the revenue would be about $142 million versus the expected $126.9 million. And then in terms of revenue, they are going to be in 2021, they're supposed to be doing 570 million. Or 565 million, sorry to be exact, and their expected was 531 million. So their guidance has gone up. As you could tell, everything has gone up, from numbers, from guidance, from what they're going to be doing, what they're like. They absolutely crushed everything, and that's why the stock has gone up. What we want to keep an eye out on is the Analyst. So they have it ranked at $38.86 in terms of the average price target. So as you guys can see here, the more recent price targets that was done in August and July, the numbers are 53, 42, 32, etc. And as you can see, the older numbers are the people that haven't really reviewed the analyst report for a few months now, since last quarter. So I do expect, and obviously this is not financial advice, I don't know what would happen, but I do expect that some of these analysts will review everything and go ahead and increase the numbers. I know that this analyst was in the call and he did look happy based off of the numbers that they were seeing. As well as Jed Kelly, he was there as well, and he loved the numbers and the information that they're providing, as well as she was in it as well. She did ask some questions and she was pretty happy. So based on the analysts that did attend the calls, they actually seemed that they really liked the information that was provided to them, and they got reassurance that they will maintain and continue the improvements. So I do expect Fubo to keep doing good in the long term, but that's pretty much it for the summary in terms of the call. Thank you for watching, and please leave a like and subscribe. Peace.